Hey guys, welcome back to another episode of Straight Talk. In this episode, we're here at our Istanbul office with Ece Selin Temel. Ece is from LP Legal. She's a managing partner. Ece, welcome to the show.
Thank you so much. Thank you for having me.
I'd like to apologize because my voice is unwell today, so it might sound deeper than it actually is. So I'm going to try to make the episode less boring as possible because this episode we will be talking about taxes, right? Taxes, property taxes in Turkey, and some other forms of taxation that would that could be related to our clientele. Certain taxes that they could face along the way while they're purchasing properties. Last episode we filmed with you, we got a great reception, and people loved the episode.
It was a hot topic then.
Right, it was a hot topic. It was what was it about? The CBI going
the increase threshold of CBI.
From 250 to 400. And in that episode, we have received a lot of comments from clients. They said, we want to learn more about the legal aspect of buying a property in Turkey. So I said, why don't me and Ece, we sit down together and we cover these subjects one by one. And in this episode, we're covering the taxes, expenses, and what is expecting our clients from a legal standpoint. Hence my first question. Ece, let's say that I buy a property. I'm a foreign investor. I have $400,000. I'm going for citizenship. I bought the property. What are going to be my initial taxes and expenses and the closing costs?
Other than the sales price, of course, there is going to be a 4% title deed transfer fees. And there's also a fixed amount in the amount of 1,500 Turkish lira. The 4% sometimes split between the buyer and seller. Most likely the buyer will pay for it. Other than that, there will be some appraisal report cost. And other than that, there's the VAT expense item, which could be 1% or 18%. Good news about that, foreigners, most likely, if they meet the requirements, they're eligible for VAT exemption. So if they don't have prior residency in Turkey, and if they're bringing their funds through international bank transfer, and of course, if the developer is cooperating with us, we can get the VAT exemption and they will not pay any VAT.
So let me understand this. 4% title deed tax seems to be the biggest tax that the clients will pay as closing costs, correct?
Correct.
But apart from that, there is the VAT, which is the value added tax, which they could be exempt from.
Exactly.
Okay, let me ask you a question because this is important from the investment perspective. So let's say an 18% VAT is applied on residential units that are larger than 150 square meters net, correct?
Correct.
Okay. Let's say that I, as a foreigner, am buying one 4-bedroom apartment in Istanbul, 160 square meters net, and I have 18% on the property. So I am exempt from that, right? 18%.
You're eligible for VAT exemption. It's
Right.
an extra process. It takes 15 to 20 days. But if you meet the requirements, yes, you're eligible.
Okay. But Turks are not.
The legislation doesn't specify it with nationality. It specifies with the residency. So if a Turkish person residing abroad, if they can prove the residence document that they are living abroad, they can also be exempted from it. But of course, in practice, most of the Turks living in Turkey, they will not be able to get the VAT exemption.
Right. Okay. So let's think about a hypothetical scenario. In a development project of 1,000 units, 200 of those units are made up of 4-bedroom apartments. Let's say, very average figure, each and every 4-bedroom apartment is selling for $1 million US. When the developer goes to the market to sell those 200 units, They're selling it for 1 million US dollars for the majority of the people. And the majority of the people are the tax residents here, who are not exempt from the VAT, which means the market value of that property is 1 million US dollars. The developer is selling it by counting that 18% in. But if I'm a foreigner coming in there, buying the exact same property 18% off for $820,000, I am essentially buying a property for $820 where the market value is $1 million. I can turn around and sell that property at any time at a profit, and this is an incentive that is given to me as a foreigner. Is this a correct analogy?
It's correct, because after the first buyer, when they sell it as a resale, there's not going to be a VAT.
Mm-hmm. Well, in that case, it makes it even more attractive for foreigners to buy bigger units.
That's correct, but also let's not skip one thing. With the VAT exemption, it's required for the buyer to keep it for 1 year.
Oh, okay.
So when they sell it for 1 year later, of course, probably property will gain value and they will not charging their buyers with VAT.
Thank you very much for that. Let me ask you another question. Property taxes in general, let's say that I own an asset. I pay an annual tax on it, right? And the rental income. After purchasing a property, let's say we paid all the closing costs, what are some of the taxes that are expecting me over the next 3 to 5 years?
There's property tax, and actually when it's determined by the municipality, property tax, cleaning tax, everything is involved altogether. The investor, the buyer, will pay for it 2 times a year, every 6 months, and it's possible to pay for it through e-government module. So they don't have to hire an accountant to do that.
Right. What is the value of that?
The value differs according to the neighborhood. Let's say for a property in Şişli municipality will determine the minimum value of the overall properties, and the property tax will be calculated according to that. Each year they will say this is the property tax according to the square meter.
And when you factor that tax in, percentage-wise, to the value of the property, what's that ratio, percentage-wise? How much of a tax are we looking at here?
It's so insignificant, we cannot put it into a calculation with the sales price because it's calculated according to the minimum value of the square meter in that neighborhood. So I would say that it could be 200 USD maximum.
$200 for just an average property.
Exactly.
Yeah,
property
per
tax is not very high.
Yeah. And that's the ownership tax, right?
Correct.
And how about rental income?
The income tax calculated according to your yearly income. There are levels calculated by the tax offices. So it can be between 15% to 30% according to your overall income in a year.
How big is the income right?
Exactly.
Okay. The bigger the rent you collect, the more taxes that you will pay.
Correct.
But do you have to pay it as a foreigner when you're not a tax resident in Turkey?
Correct. Because the rule is if you live in Turkey less than 6 months, you will only be taxed for the income you generate in Turkey. So Turkey will not ask for your international income. However, if you stay in Turkey more than 6 months, you will be a full tax resident. In that case, your overall international income will be subjected to tax. But with that, I have to add that Turkey has a prevention of double taxation over 180 countries. So if you paid your tax in your own country, you will be deducting in Turkey. Or if you paid your tax in Turkey, and if your country is taxing you for your international income, you will be able to say that I paid this tax amount in Turkey, and so the tax rates will be subtracted from each other.
Wow, that's one of the repeating questions that we get from the clients, because most clients, not most of them, but a significant portion of our clients, they're going for the CBI program through real estate, and they're acquiring another passport. The biggest question in their mind is, okay, am I going to be double taxed? If I'm a U.S. citizen, am I am taxed on my worldwide income. So am I going to pay to Turkey? And also, am I going to pay the taxes to the U.S., to my own country and everything? So that's that's a gray area in the client's minds. And you're saying that the Turkish laws prevent the double taxation. Can you elaborate on that?
The income tax is 15% in Turkey, according to your yearly income in Turkey. But the income tax, let's say it's 30% in US. You already paid your income tax with 15% in Turkey, but US is asking for 30%. In that case, you submit that the paid tax amount to US, and the balance amount will be subjected to tax in US. So the basic system works like this in these treaties.
Right. So you won't be paying an over and above, an incredible amount of tax. Well, that's great to hear. That's definitely great to hear.
And also in these treaties, there are some extra clause. They would be exempted from a certain tax. So this calculation might not be made in some tax items. So each treaty is different than each other. So a tax consultant would be able to elaborate and calculate what is the exact tax that the investor will be pay.
Right. Okay, so now we know the closing cost that we would pay, the initial taxes that would apply on us. We know the ownership taxes, the income tax, the rental income tax, and everything. Now, let's say when I come to sell my property, what sort of taxes are expecting me?
If you sell your property after 5-year mark, there will not be extra capital appreciation tax. If you sell it before 5 year, let's say if you sell it within the first year, the capital appreciation tax will be higher. And the higher you sell your property, of course, the tax will be higher accordingly. If you sell it close to 5 year, let's say in the fourth year mark, in that case, the inflation rates will also be deducted from the tax. So the longer you sell it and the less amount you increase your sales price, the tax will be much less.
But to give us an idea, let's say that I bought a property for $100,000. 2 years later, I'm selling the property for $150,000. So I'm making a $50,000 profit. What sort of a capital appreciation tax am I looking at?
It could be between 20 to 35. It will increase marginally.
Okay, I understand. So there's no fixed rate. It's 23%, 25%, 27%.
It's not. The calculation is made according to the time you buy, the time you sell, and the increase you made while reselling your property.
Okay, that's great. All right, Ece, thank you very much for this episode. We basically covered all the taxes that a property owner would pay at the initial stage, at the closing cost stage, at the ownership stage, and at the exit stage. And thank you very much for this. And for more clarity, if you guys want to get more information with this WhatsApp number, you can reach out to us. With Ece, we will be covering hopefully more episodes and more subjects, legal subjects. We'll talk about, what are we going to talk about next? Tenants?
We are going to talk about the rental law regime in Turkey. How to make the contracts, if they want to evict the tenant, what are the owner's rights, what are the tenant's rights. And we will talk about bank account process.
Oh, the banking in Turkey.
And also opening up a business company. What are the incentives by the government? What are the advantages, disadvantages? Right.
Cool. I'm looking forward to it. Thank you very much for coming.
Thank you.
Guys, thank you very much for watching, and see you in the next one.